I'm Stuart Eliot. I'm here with Bui and Jeronimo Harrison to talk about our really strong returns for the last financial year. Our 1970s Life Stage Fund, which is our largest cohort, including myself, returned over 12.7%. What happened in markets?
So it's certainly been a wild roller coaster ride in markets over the last year, guys. We kicked off the year with a Monday morning in August when shares had an 8% peak to trough falls because investors were thinking that we would have a spike in unemployment rate and we would have a recession after 2 years of central banks aggressively hiking rates. We then had the tariff man Donald Trump kicking up tariffs to the highest level since 1940, bringing it to about 15% compared to 3% over the last year. That has led to a 19% fall in shares between February and April this year. And all of these were made worse by the fact that everyone was so concerned about a rising US level of government debt. That has made bond yields much higher than what it should be, as inflation was falling and central banks were cutting rates, but bond yields remained quite elevated, making shares much less attractive compared to bonds. So with all of these wall of worries, how come we still achieved such a spectacular returns for 2 years in a row, Stu?
Well, it wasn't just because shares went up. We've been working on portfolio simplification for about 4 years now, so that was taking a quite disparate range of superannuation funds and streamlining them into a much simpler portfolio range and structures, and that has allowed us to make the most of being a large superannuation fund. Also, about 3 years ago, we embarked on a portfolio strategy review, which is a really honest appraisal of how we could have been doing better as an investment portfolio. And this has led us to reshape the portfolios quite significantly and being able to deliver much more reliable and persistent returns for our members, which I think is a really important thing. Part of that was building out our direct infrastructure program, and most recently we've been adding to renewable energy generation, in particular in Australia and Europe, and we've also been topping up our direct property investments, buying at quite interesting discounts from distressed sellers. Over a more shorter term view, we had been overweight US shares since 2023, and as we came into February in 2025, we felt that the clouds were starting to darken and we took profit on this overweight for quite a meaningful profit. Now we're square with our strategic asset allocation, but if we do see meaningful falls in share markets, we'd be quite keen buyers for long-term investments. Jeronimo, what do you see that we've learned from the last year and what's your outlook?
Yeah, so this financial year was an interesting one. It really proved that time in the market rather than time in the market is the key to success in superannuation. It's always tempting for members or investors like us to move overly conservative when things are scariest. So if you look at something like our MySuper 1970s option, for example, if we switched into cash during peak uncertainty in the April tariffs and then took 30 days to reinvest, then we'd be giving up over half of the return that that option generated throughout the year. So you can see more often than not that these kind of, overreaction to information can lead to poor outcomes. Yeah, so looking forward, we do expect more uncertainty and volatility as geopolitical tensions rise. But overall, we're feeling good about the future and we think it's appropriate to remain invested in line with our long-term strategic asset allocation. So the key 3 messages for me this year are turn down the noise, remain diversified, and stick to a long-term strategy.